The PSG Bond Fund was launched in December 2024, and it adds to PSG's already well-regarded fixed income fund range. Joining me today to unpack more detail on this fund is Fund Manager Duayne Le Roux. Duayne, the existing PSG fixed income fund range comprises the PSG Money Market Fund, the PSG Income Fund, and the PSG Diversified Income Fund. Can you explain to us how the PSG Bond Fund complements this existing range?
Yeah, certainly, Audrey, and thank you for having me, and thank you everyone for listening. We're very excited about the opportunity within the PSG Bond Fund, and I appreciate that you made reference to the range of funds that we have. Each fund is unique in its own characteristics and its offering that it provides to clients. But what is consistent across the range of funds is that they all lean on a very strong and credible investment process that is proven through its track record to be capable and able of delivering for clients on the required or the expectations. To make an example out of one of those funds, I'd say for the PSG Diversified Income Fund, it's consistently proven the capabilities of the process on which it lends in its ability to deliver top quartile inflation-beating returns for clients on a consistent basis. This is something we're really proud of, and obviously we have been approached as on behalf of clients that to be able to access more tailored experience to these returns, and across the Diversified Income Fund as well as our other fixed income funds that you mentioned, a key driver of those returns have come from our performance within the bond space. And clients have requested a more tailored experience or exposure to these to our take on bonds and our allocations and our understanding and our ability to deliver in the bond space, and hence the PSG Bond Fund was born. And we look forward to it providing for clients and delivering on the expectations going forward.
So Duayne, on that note, can you provide a refresher for us on what the role of bonds are typically in a portfolio and what kind of dynamics investors should expect from this component?
Yes, certainly. So first of all, I think it's worth mentioning right off the bat that bonds are an investment class or an asset class, an investment asset class. And as with all investments and all investment asset classes, they carry risks. And bonds are not spared from this. There are also risks inherent to bonds. And this is why it's important for investors to understand and keep in mind that we need to make sure that we're well rewarded for the risks that we are taking on. Now, within the bond space, generally, bonds are considered very stable, earning gradually returns over time. And typically, this is the case. But there are also periods in time in which the journey is not so smooth, or not as always as smooth as that. And we've experienced that within the South African bond market. But on the same page, there's also been times when bonds and bond markets have been very, very generous. It's really important for investors to understand that this is potentially also part of the return dynamic within bonds, and it's why it's so important that as bond fund managers, we want to make sure we are delivering the best risk-adjusted return for clients. In order to do that, it's important to understand the drivers of bond returns, and principally there are two amongst others: the yield that the bond is offering, which you can think of as the return you can expect from a bond if nothing else changes, but it's also the price that you are paying for the risk that you are taking on by investing in the bond. So, for example, credit risk, the risk that the borrower defaults, or the inflation risk, the risk that the bond doesn't deliver inflation-beating returns. The other component or key return driver is the duration of a bond. Duration of the bond you can think of as the sensitivity of a bond's price to the changes in yield. Now, the role of the bond fund and the bond fund managers and the team as a whole is to make sure that the bonds selected are of adequate quality, to be able to make sure we're getting paid for the risk we're taking on, but also that it's constructed in a means that delivers the best risk-adjusted returns for clients.
Duayne, with that in mind, who is a bond fund suited for?
Yeah, thanks, Audrey. It's an important question, as I'm sure the investors at home are also wondering. So bond funds are generally over longer periods of time deliver somewhere around or bonds, I would say, deliver somewhere around 2 to 3% over inflation. So generally, it's a good investment class for investors that are needing to take a longer term view. But also on top of that, it's an asset class that can be very beneficial for investors who are seeking really good risk-adjusted returns when compared to, for example, equity or multi-asset funds. Then I would also say bonds, because they are so unique, or bond funds, because they are so unique, they can form a really beneficial role as a diversification tool within a balanced portfolio for the dynamics that they offer. And then lastly, for the investor looking for opportunistic exposure to bonds, maybe they have a view that they'd like to express, and the bond fund can offer an opportunity to do that in a very neat way.
PSG Asset Management follows a 3M process in managing funds. Can you give us an idea of how that translates when managing a bond portfolio?
Yes, certainly. So as we mentioned right in the beginning, across our range of funds, what is consistent is that they lean on the same well-established and consistent investment process that is bottom-up in nature, as well as in a process in which we pride ourselves in doing our own research and analysis. Furthermore, as with all our funds, we take an active approach to managing funds, and what we're really trying to do for clients within all our funds, and particularly as we embark on this journey with the bond fund, is deliver the best possible risk-adjusted outcomes for our clients. And within fixed income, as well as our multi-asset funds, we've proven to clients over a significant period of time that we are a safe and capable pair of hands that they can trust to come to work for them every day and fight for the promise that we made for them within the mandates that they are invested in.
Duayne, thank you so much for that introduction to the PSG Bond Fund.
Thank you, Audrey. Thanks, everyone.